This asset, we see tremendous growth potential, but underlying that growth potential right now is a foundation where we're looking at something in the region of 11 to 14 years of production. One of the lowest cost zinc equivalent producers in the world, at around 79 cents for life of mine, 59 cents for the first 12 months. And the important thing again is it's going to generate a lot of cash.
Hello and welcome to the Assay TV. Today I'm really happy to be here in Toronto with Mark Brennan, Chief Executive Officer and Chairman at Cerrado Gold. So Mark, great to see you.
Very nice to see you. Thank you.
And so as always on the Assay, we really like to kind of start things off with a bit of an introduction to your company and its current journey.
Well, I guess Cerrado is on an exciting journey. We're basically now in production in Argentina, where we produce about 50,000 ounces a year, generating quite a good cash flow at $33,000 gold. And then we're looking to grow the business we recently announced an acquisition in Portugal for Lagoa Salgada, which we think is a project that is construction ready. And we hope to be in construction sometime in the next year. And then we also have a second development project in Quebec, a very large and substantive iron ore project that we see as just having a tremendous potential for generating strong cash flows.
Okay, sounds great. Maybe we can start off looking a little bit more about this recent acquisition in Portugal. So, can you talk us through a bit of this decision?
Yeah, sure. We're very excited with Lagoa Salgada, and we think this is a project that has been long undervalued, unloved, which is kind of the acquisitions we like to make. And combined with Cerrado being a little bit unloved itself, we think that both shareholders are getting a good symbiosis here to 1 + 1 = 3. But this asset, we see tremendous growth potential, but underlying that growth potential right now is a foundation where we're looking at something in the region of 11 to 14 years of production. One of the lowest cost zinc equivalent producers in the world, at around 79 cents for life of mine, 59 cents for the first 12 months. And the important thing again is it's going to generate a lot of cash. Our focus, as you can see, we have a little bit of gold, we have a little bit of polymetallic, we're looking at iron ore. The real objective that we have is to generate cash. And so we see Lagoa Salgada, one, as being an asset where we can generate 100 million of cash a year. Two, we see the ability to kind of take us for this next step, which is to move into developing Quebec, which is a much bigger asset and will require more cash. So combined with Argentina, Portugal, and then Quebec, our target is to be at about 400 million of cash flow by the end of 2030. So it's not too far away, but pretty lofty ambitions. And the real thing that's critical here is we're trying to do this without dilution. We're going to very much minimize our dilution, when we do this, and we think that'll be a really good boon for shareholders.
Okay, sounds great. Can you talk us through some of the current plans that you have in place for Lagoa Salgada?
Sure. Well, right now we're expecting within the next couple of weeks to get the environmental impact assessment approved. So the permit will be a first great milestone. Second will be completing the metallurgical testing, and that'll be completed sometime in April, May. And then in June, July, we're anticipating an optimized feasibility study. We think the numbers are going to be far superior to the numbers that we've seen to date. And then from there, we're looking at a construction decision sometime in November. So we'll be working on funding. We already have funding partners who have shown support. We have the UK Export Credit Agency working with Banco Santander to help us with the debt funding. Sprott have come out and said that they're prepared to help us with a royalty. And on top of that, we expect that we'd probably look at an offtake arrangement, which will account for most of the funding required for this project. Any supplementary requirements, we think we can fund internally through our cash flow. We don't think it'll be a big number. So from that perspective, we're looking at this to bridge another $100 million of cash flow, which is really critical.
Yeah. Okay. Very interesting. Definitely something that we're going to have to keep tracking with your team. So let's look maybe now at your flagship project, Minera Don Nicolas mine. So in Q4 of 2024, you released some interesting results. can you talk about kind of what your focus is for this?
Sure. I mean, we've owned this asset since 2021 when COVID struck. So it's had its, it's been on its hind legs, even though we've taken it from 20,000 ounces of production a year to 50,000 ounces. We see a lot of future for this asset. We have a large land position, 300,000 plus hectares in Argentina. The reality is that there's lots of very interesting opportunities to grow this asset through exploration. We're now looking to get pretty aggressive on the exploration side. We brought in, we're bringing in two very senior explorationists who we think will have the ability, who are mine finders and deposit finders, to help us with that. But what we're looking at is we've got a foundation again of about 4 years of operations through the heap leach. We see that actually being augmented by other additional low cost, low grade material moving forward. But on top of that, we have yet to go underground, and every other mine in the vicinity has really grown through underground mining. And so we are starting now. We're going to start development underground in April. We expect to get initial production starting coming out in June. But the objective here is not so much for the production, but really to drive the exploration to really drive up our life of mine.
Sounds great. And so let's talk a little bit about the various jurisdictions that you're operating in. So with Argentina and then Portugal as well.
Yeah, so Argentina is a complex jurisdiction. It has been, but it's getting better. And I think in terms of everyone expects that the currency controls that are in place today will be removed by the end of the year. The government in Malay has come out stating unequivocally that this time, the end of after December 31st, these currency controls will be removed. Won't be there, excuse me. And from that perspective, what we're looking at is that'll put, I think, a lot more investment focus in Argentina. We want to be nimble. We want to look at opportunities for ourselves there. But in terms of we work very well with the unions. We work very well with the provincial and federal government. So for us, it's been a very good partnership with our stakeholders. And again, they've been very aware of the fact that there's been pressures due to COVID, pressures due to junior companies with the currency devaluations, et cetera. And so now we really feel that we're on a really strong managerial focus for the asset, as opposed to fighting the asset and trying to build the asset. And now the exciting and the fun part will begin by really striving to get a lot more exploration resources.
Okay. And are you fully funded to, you mentioned for the new acquisition that you're already funded for it, but what about for the?
Yeah, well, with Argentina, again, we're going to produce 50,000 ounces. We put out a PA in the fourth quarter of 24, talking at 2,100 gold, we should generate about 25 million of free cash. Now at $2,800 gold, we're probably closer to 40 million of free cash. So that's a really nice metric, meaning that we will be able to drive our operations, not only in Argentina, but also to help us develop Portugal and Quebec as well. So, it's a very, it's a great start that we have. Again, we see giants all around us in Argentina. We've got, Cerro Vanguardia to the south of us. They've produced 8 million ounces to date. You got Cerro Negro by Newmont. They've got about 7 million ounces in their depository. You have Cerro Moro, which is next door to us. They've got about 3 or 4 million ounces. So we're in really good country. And the fact is, our objective now is to double, triple our resources in the next year. And if we can show that, I think the market will really get behind that.
Okay, sounds great. And so we haven't really touched on Quebec at all. Do you want to kind of talk us through what's going on?
Yeah, I guess in Quebec, what we're looking at is it's a very straightforward and moderately simple asset that we're looking to develop. And the biggest thing in iron ore is always to have infrastructure in place. And this project, we're 20 kilometers from a rail line. We go down to a port of about 400 kilometers away. There's a port, a deep sea, all winter, all season port that basically has no clients. So from that regard, the rail and the port being looked after, really what we need to do is build a plant. We're looking at initial production of about 5 million tons per annum. Basically that 5 million tons will use only about a quarter of our total resource base. So we're looking to expand that probably pretty quickly. But the 5 million tons per annum will probably cost us about $700 million to capex. We have the UK Export Credit Agency, UCAF, and also TD Bank are showing support for the debt, about 70% of the debt. And so from that perspective, we think it's something that we can fully manage the production of. It's an open pit deposit right at surface. It's pretty straightforward. It's a pretty amenable project for anybody to operate. We have a very strong operating team in Quebec. So from that perspective, we don't see any major challenges that we can't oversee. On the funding side, again, we've got 70% of the capital requirement looked after. We think with such a strong project, we shouldn't have a problem bringing in an off-taker as well as a stream company to help us develop that. And the nice thing about the iron ore business is people sometimes oversee and make it over complex. It's a pretty straightforward, almost an aggregates business. We actually are very fortunate. In the last year, we've developed what's called a DRI product. This is a high grade, high purity. Generally, the iron ore market is growing at about 2%, 1% to 2% per annum. This segment of the market, however, it has a very strong impact in terms of economics for production, for steel companies. And on top of that, it also reduces their carbon footprint. So we see this DRI product receiving about a 25% premium to existing iron ore prices that you see conventionally priced. And from that regard, that market is growing about 9 to 10% per annum. So it's a high growth rate that we're moving our product into. So from that regard, we'll complete a feasibility study by the end of the first quarter of next year. And we see strong demand for this project. And for us, again, a nice long-term project to generate a lot of cash. It's the equivalent of about 300,000 ounces of gold. So it's a good sized project.
And I suppose just to wrap things up, do you want to highlight any kind of major milestones for the coming couple of months?
Well, I think obviously, going underground in Argentina, first and foremost, that'll show, really strong potential for resource growth that I think just the market has been waiting for. Second of all, if we can show our project in Portugal, Lagoa Salgada, coming into construction, I think that'll have a significant improvement in terms of our enhancement of our valuation. And then following that, we're not too far away from Quebec coming on stream. So from that perspective, we've got a good channel of projects laying out. Again, we believe that we can do this all without dilution. If we can generate $400 million of cash flow starting in 2030, basically I'd have to believe that our market cap will be $2-3 billion. So it's not a bad return for shareholders on the basis that we don't expect dilution, and the fact is it's a pretty clear plan.
That sounds great. Well, Mark, that was all the questions that I had for you today. So thanks for joining us here at the Assay.
Thank you very much. I really appreciate your time, and please keep an eye on how we progress. We're very excited.
Absolutely.
Thank you.
Thanks.